I want to welcome everybody to SCORE, Central Jersey's webinar this morning with Tina Parmigiana. My name is Jane Meyer, and I'm with the Central Jersey SCORE chapter. Welcome and thank Tina Parmigiano, sorry, for being with us today. Tina is an expert in finances and tax preparation. She has her own TaxWise services company. The really nice thing about Tina, in addition to being a tax expert, is that she's a SCORE mentor as well. And she's with the Ocean County chapter. Is that right, Tina? Ocean County,
yes,
right?
Ocean County.
So I want to welcome Tina. Thank you for being with us. I'm going to stop this and bring you in.
Great. Well, good morning, everybody. I'm going to share my screen. We'll get onto it because I know sometimes to leave a little room at the end for Q&A, I need to stop talking so much and start listening at the end. So I'm going to share my screen here. And let's see. Here we go. Okay, let's get that off. I am new to sharing my screen so much, so bear with me for a moment here as we do that. Okay, here we go. Okay, perfect. So my name is Tina Parmigiano, and I live down here in Southern Ocean County in Barnegat, and I have owned my business, my tax business this will be my 27th tax season. So it's a long time, and I stay up to date every year, going to certification courses and make sure that I bring the most up-to-date information to you. So today I'm going to talk to you about tax preparation, but also about your businesses. If you're new in business and you're operating as a sole proprietor or maybe an LLC, S corporation, we want to make sure that you're operating your business, your company at the right type of formation for you. Okay, this is new. There we go. I'm a little nervous, so just bear with me. That's why I love lives, because you get to see the real us and not just the whole giggles out there. What I'm going to be talking about is the accounting and tax practices, keeping good records. That is one of the #1 things that I cannot reiterate enough to small businesses, because when you get started, the longer and the deeper you get into it, the harder it is to go through. We'll be talking about what is business income, your deductions and expenses, some auto and home office deductions, because that can be hard sometimes with knowing which way to do that, as there is the standard and simplified way, or you can do it the actual accounting way. Depreciation, small self-employment tax, common types of business structures, which we mentioned, and filing for an extension at the end. We all know that 2020 brought us a lot of headache and a lot of confusion. So we are not quite sure what's going on out there, because even the government is still up in the air with a lot of different things, and they haven't brought us quite everything that we need to know moving forward. So we're just sticking with what we know and doing it the best we can. There are several different common types of business structures, which is your sole proprietorship. That is where it is just based off your name. You can have a federal ID number, but you don't have to have one. You can use your social security number, which a lot of people do, and that is only for one person. You can have employees with a sole proprietorship, but it has no liability. You personally are responsible for everything you do in your business. The next is a limited liability company. Those are state-based. The IRS does not look at them as a corporate entity. They are looked at by the IRS as a sole proprietorship. Then there's the limited liability partnership. That's where you have 2 or more in a partnership. It can also be like a general partnership where you're filing a different form and getting your taxes done. These are just different ways, actually, that the IRS taxes you and how you report your income and your deductions and your business to the IRS. Then you have the subcorporation, which a lot of people will file and open up an LLC and later go into an S Corp after they start making over a certain amount, when they want to start taking their own payroll for themselves and other owners, being able to take the extra income that comes in above and beyond your paycheck as a dividend, saving them a lot of money on self-employment tax. And then you have the big C corporation, which is usually much larger and a lot more complicated and brings on double taxation to the owner. So that's something out there that you can discuss later with your accountant or your CPA or whoever that, you know, that you have in your corner. So 3 steps to manage your tax preparation. Okay, here we are in January, right? So what we need to do is we need to make sure that we are prepared before we go to see our tax professional. If you don't know what you need to do, call them up, ask them for an organizer, talk to somebody about, you know, a sheet of which you can write out, what can I deduct this year? There's all kinds of crazy stuff. The IRS, and with the, if you got a PPP loan, when you first got it, they said initially that you were not allowed to deduct anything that you paid off with that PPP loan because the money would be forgiven. And so you couldn't claim the expenses. Well, now they've lifted that, and now you can claim the expenses that were paid off with that monies. So it's really important that you know exactly what to do in that manner. Talk to your CPA or your tax accountant. There's enrolled agents, tax professionals. Any one of us can help enlighten you and help you to prepare and plan for the taxes ahead. Knowing when the due dates, right now, the IRS just issued the date to open. They're going to start accepting tax returns on February 12th. Right now, I don't know how that affects the filings for partnerships and 1120Ss going into March. They may postpone it a little bit longer because the tax season is going to be shorter, but they also may extend it. So that's all up in the air. And the third very, very important thing is to save your money. I mean, we all want to save money, right? And a good way to do that is by tracking our receipts and our expenses. There are multiple ways to do that. And make sure you record all of your income, because when you do it right from the very beginning and you report all your income like you're supposed to be doing, and then you go and you start doing your expenses, you will be better off if the chance should ever arise that you are audited, which, you know, is usually selected by the IRS computers, and unless some heavy duty red flags have been thrown up and they're calling you out on it. So let's talk about how do we keep track of everything and how do we do our accounting and bookkeeping. For taxes and accounting are 2 different things. A lot of people don't understand that. They think that because they can write it off in their accounting and the way that they put it into their program and all that kind of stuff, it's the same way as it goes for taxes. And there's a lot of things that don't look the same, because there's things that the profit and loss on your Schedule C or your tax form is going to read differently than it does in your accounting, because there are certain things like depreciation doesn't show up in your accounting, like your accounting books, but it does show up in your tax paperwork. So what happens is, at the end of the day, when you look at a regular profit and loss and you look at your tax profit and loss, say your Schedule C, the numbers are going to be different. It's going to say that you made a lot less money because they depreciate. So they're not taking the whole numbers. There's going to be things that you expense out all your mileage on your vehicle, which you don't do that in your accounting software. So it's going to look a little differently. But you can do basic business accounting practices. You can do it very simple if you have a small business. If you're just starting out, you can use something so easy as just a spiral notebook and that has 2 dividers. You know, Mead has like 3 subjects and things like that. You can set one up that is just for your income. The other one you can set up for your expenses and write out everything that you bring in that day, and then go to your expenses and all the money that you spend. For all your receipts, you have your cell phone. Everybody's got a cell phone, especially if you're in business. Set up, download Dropbox or something like that on your phone. There's plenty of free versions of different things like that. Take pictures of your receipts and just load them up in there. That way, if you lose all your receipts, you still have it in your file of your Dropbox on your phone. And then at the end of the month, if you have an accountant, you can forward them over to them, or you can pull them back out, look at them, and record them. It's just a good, simple way without losing things and without going crazy with that kind of stuff. If you're tech savvy, there is QuickBooks, there's Waze, there's Xero, there's so many different simple tax programs out there that you can use for business startup. And as you get bigger, they grow with you. You can also talk to your accountant or a tax professional about that, your CPA, of what would be best for you and ways of tracking that. So here we are, different ways. I think we just covered that. Your income, now we're talking about income and not so much the expenses. With your income consists of checks, cash, credit card payments if you have merchant services, barter exchange. If you barter with somebody and it's an even exchange, you need to make sure that you claim that as income, what you've received in exchange, and also what you give them in exchange for that is an expense for you. So even though it may wash, you want to make sure that you record that in your paperwork. Cryptocurrency is a big one now. People, especially if you have digital businesses, cryptocurrency, if you do everything on an online banking that you don't physically get cash, you use the new debit cards that they've got out there, you're using Bitcoin, anything like that, you need to make sure that that is also recorded as income. Debt forgiveness, if you owed money to something and they forgave the debt, that is also income because you've got either the services or the product for that, but the income that you were, the money that you forgave is now for you, it's income for you. That is if somebody forgave you and you're not paying them. If you forgave somebody else's debt to you, that is considered an expense, a bad debt expense. Earned interest on if you have a savings account, a business savings account, if you have some sort of other account in place where you are earning interest, then you need to make sure you claim that interest as well. These are some of the major expenses that you will see, especially on a tax return. Your advertising and promotions, whether you do advertising on paper, digital advertising. Don't forget, if you spend $30 for Facebook ads, you know, it could be something so little as that. Remember, anywhere that you spend, you know, your hosting of your website, that can also go as advertising because that is what it's doing for your business. Anything like that, the pens that you buy with your name on it, all the shirts that you may buy for yourself with your logo on it, presenting yourself, that is a deductible expense for your advertising and promotions. Your auto expenses, you have standard, and then you have where you go per mileage on using your mileage, or you have actual expenses where you track the gas, the repairs, the depreciation on the vehicle, and all those other things. Bad debts, once again, your bank and merchant services. There's a bunch of them here. You can read them for yourself. I won't go over all of them as time runs short, but just take a look at this. You can get copies of these, this PowerPoint. Just leave your email address and we'll make sure that you get a copy of this if you want this for reference later on once this is over. Tracking your receipts. We discussed that a little bit. There is, like I said, there is Receipt Bank, QuickBooks, Shoebox, they've all got something. If you have QuickBooks and you've never paid attention to this, you can actually download the app on your cell phone and you can click a picture of your receipt and it will upload it to the right expense. Just have it set up right. So many of these, QuickBooks also has a mileage portion where you can set up your mileage on your vehicle that will track into your QuickBooks and help you out with that so that you can have it. Because let me tell you, I have had clients from past experiences that were in real estate that they got audited on their mileage. And it took a lot for them to verify the mileage because the IRS initially said, no, we're not, you can't claim any of it. But after getting everything back in order and pulling up calendars and getting written statements from clients and everything else, they were able to put a lot of the mileage back. Having something that is trackable, that you can print off, that you can attach, should it be needed and necessary, then that helps out. All of these things, Excel spreadsheets, there's so many different ways. Google in there business tracking on your computer, and it will give you many, many ways of doing it. If you're a paper freak, get a manila envelope, get 12 of them, and every month, every day of every month, just throw all your receipts in there at the end of the year, staple them all together. You've got your receipts. That way, at another time, or if you hire somebody, you can have them put it in there and scan them into your computer system for safekeeping, and then, or download them all onto a flash drive. There's many ways to track, but it is so very, very important, especially now if you've got a PPP loan, if you got the EIDL loan or any of those, you're going to need, or the EDIL, I know it came up. I read these things too as it's going down on the bottom. Sorry, I don't mean to confuse you there. There's a lot of ways to track, and it is so very important. As I have someone in the beginning, when you're starting out, it's important too to have somebody to help you track these things. Auto expense, actual or standard. These are your rates. This is what they were in previous years going through. You have the 57.5 cents per mile for your business that we just had, and that is how you're going to track it. Sometimes you're going to want to see, but if you buy a new vehicle and you put that in there, you need to, if you are going to do standard, you need to leave it at standard. If you're going to do actual, depending on the way that you use that vehicle in your business, will differentiate whether or not you can switch between a standard and an actual moving forward. But these are your mileage. Going forward for 2021, they dropped down the cents per mile to 56. So it's 1.5 cents less than 2020. So, and funny, nobody drove anywhere for 2020, right? Most of us ended up staying at home and working out of our offices. So in 2021, you would think that they would up it and not bring it down. But we'll see what happens going forward. You never know what to expect. Home office. If you have a home office, there are some really important things about this. As I was reading again last night to just make sure that they hadn't changed anything with COVID or any of that. Having a home-based office. A lot of people ended up going home, moving their office, working at their dining room table or however they wanted. But in order to claim space in your home, it has to be exclusively for your business. That means it can't be your bedroom. It can't be your dining room table where you have, people over and all of that kinds of stuff where other people are eating at and things like that. It has to be exclusively for your business. And there is a big thing. That's why a lot of people in the past did not claim home office, but don't be afraid to claim it if that's what you're using it for. There's two ways you can do it: by taking the square footage of your home, square footage of your office, taking that percent, and then you can claim the percentage rates of your utilities, your property taxes, your mortgage and that kind of stuff. Or the simplified option is to just take $5 per square foot up to 300 square feet, and that would give you a $1,500 direct deduction. Sometimes that actually works out better for people than it does going by the actual method, unless you have a really big house and you have a huge office, or also if you have a large, if you use your say your whole garage, if you have inventory and you have shelves, if you use a closet for your inventory, say your direct sales, and you have a place where you have just your inventory in, you can count that as home office space, as long as it's used for your inventory purposes only. Primary business taxes is your business income tax. If you are self-employed, you have your self-employment tax. If you're an LLC, you pay self-employment tax. Once you become an S Corp or above, then you no longer have the self-employment tax. You are paying taxes through payroll, and then anything that is flow through on an S corporation is considered ordinary income or a dividend, and that's how that will be taxed. Self-employment tax is the 15.5%, which covers your personal and the businesses and of Social Security, the FICA tax, and Medicare. So it is a big chunk of change that can be. So it is so important that is why you want to pay quarterly taxes if you're making good money. Good example is I have a client that decided that he didn't want to pay self-employment tax throughout the year. Well, he made close to $1 million and couldn't understand why he owed, after all his deductions, he still owed $34,000 in taxes. And you got to pay that off. And it's not cheap. If you pay your quarterly, you can cut that down. Not only that, if you pay quarterly taxes in the right way, and take last year's and take 100% of last year's and divide it into 4, then going forward, you're not going to get slammed with a penalty at the end of the year if you have a higher rate. Or if you have less and you paid more, you can just roll that over into the following year. But it's so important to understand self-employment tax and how it works, because that's how a lot of people end up at the end of the year owing such a big chunk of change. Don't forget, when you have withholdings, you pay your state tax. Your sales tax must be, if you have to collect sales tax, please, please, please open a separate account for your payroll taxes and your sales tax, because that sales tax does not belong to you. It belongs to the state of New Jersey, and you have to pay it either in a monthly basis or on a quarterly basis. You don't, they will come after you. And it is not an easy fine. It is, it can be steep. I think I do believe it's like $100 for the first part of the fine, and then it goes up from there. So if you don't have sales tax in a quarter, then go in and file zeros just to make sure that they don't come back to you and fine you for not filing your sales tax. And that is only for those that do collect sales tax or have sales tax in their business. The employment taxes, if you have employees, make sure that you pay your employer's employment taxes, the payroll taxes, every either month or quarter as it goes for you, depending on the size of your business and how much payroll tax that you have. If you don't, they're going to find out, and it is a very steep penalty. And you don't want that to happen, because the longer you wait, the more it adds up, and then the harder it is going to be in the long run. Self-employment tax rate, just like this, additional 0.9% tax if your wages are over these amounts. For everyone else, this is just a little thing that you can look at and kind of find where you are at in your self-employment. Know your tax obligations, the form that you have to have filled out, talk to your tax professional once again. If you have workers' comp things, you can do a pay as you go. Make sure that you know the dates in which they are due, because you do not want to be late on making these payments, because they will automatically put in there for penalties and interest, and they rack up really quick. So make sure that you know when your tax due dates are and that you're making your payments in full. If there is a hardship, make sure you contact the IRS or to let them know the situation and that you can make payments. It's better to keep them up. They want to see that you know and that you understand what's happening, and they will work with you. It's when you try to ignore it that they really want to come after you. March 15th right now is the due date for the tax filing for partnerships, multi-member LLCs, the Form 1065, and S corporations. If you cannot file by the 15th of March, then make sure that you get your Form 7004 in for an automatic application the application for automatic extension. That extension goes to September 15th. But if you owe taxes, the monies are due, or the estimated payment that you make is due on March 15th. It doesn't mean that you can extend the payment. It means you extend the form in and of itself, but the tax payment is due for year end on March 15th. Or if you have a different fiscal year, then it goes by that. For deadlines for your Schedule C, single member LLC, sole proprietors, even multi-member LLCs that are filing on a Schedule C, you file the extension 4868 for a Schedule C that will push it all to October 15th. But the filing date for individuals, LLCs, and multi-member LLCs is April 15th at the moment. We don't know yet if they're going to extend it or not. We won't know for a while, since they just finally came up with the acceptance date of when they're going to even start accepting our returns. What you have to understand, if you are a small business, this comes in with another client that I am helping out. They did not realize that a Schedule C is actually attached to your 1040 return. You cannot file your personal business return without filing the Schedule C attached to it. You cannot file your personal return if you do not have your K-1s attached to it from your 1065s or your 1120Ss. Very important that when you're filing, your business returns should be done prior to filing your personal returns. May 15 filing date, nonprofits. If you have a nonprofit, make sure that you get that done by May 15th. The extension for that is November 15th. Just make sure that you know your tax deadlines. It's the best way to go and how to do all of this. So it's very, very important. And like worst of all, compounded by a whopping 20%, 25% of the taxes you owe is what you will hit by if you don't make your tax deadline. So it is just so important between penalties and interest. And it's hard to, if, circumstances arise that it made it completely impossible, then you possibly may be able to get an abatement, but they usually only do that once. And it has to be for a very good reason, like you were in the hospital and there was no one that could do this, something extreme. So with that, just always remember that it's just best to pay it. If you know what you're going to be paying, put money aside. I suggest, in your tax bank account, always put 25% of all your income into that account, because it can act as your tax account as well as a savings account for your business. But if you don't touch it, you know that you always have your taxes paid, and it's not going to hurt your bottom line at the end of the day. It is going to benefit you because that money is always going to be there. 5 key points to remember. Get qualified advice. Don't ask a friend in business, because a lot of times they only know what is good for their business. Their business may not be the same as yours. So there may be differences in things you can deduct and how you deduct things, or the type of income. All income is taxable, but depending on if they do things on an accrual way or if they do it through cash. So it's better to get qualified advice through SCORE, through your accountant, bookkeeper, your tax professional, but make sure your CPA, make sure you reach out to somebody that knows. I've been in there. I was in a group where somebody came up, but because they were just a leader in that group of other groups, they gave a tax thing for direct sales. I'm sitting there. I wasn't allowed to speak, but the problem is what they were saying was false. It's taking things out of context. And if you don't know exactly what you're doing on that end, you can set yourself up for a real big slam. So you do not want to do that. Learn your business tax liabilities, the income, your employment, self-employment, sales taxes, all of that kind of stuff, Social Security and Medicare. What is your portion of taxes? If you are an LLC, you do not put yourself on payroll. I cannot emphasize that enough. You are not an employee of an LLC. You are the business owner. All income that flows through after all the expenses, the net profits of your business on an LLC or a sole proprietorship, or even a partnership, flows through to the business owners, and you pay self-employment tax on that monies, on that income. Only when you become an S corporation or a C corporation do you put yourself on payroll for what is ordinary income for your position, taking that salary, that you are on payroll. You don't pay self-employment tax because your taxes are taken out of your paycheck. Then all net profits above and beyond what you have taken for salary flows back over to you in an S corporation, that is, flows back to you as ordinary income, where you do not have to pay the 15.5% or 15.6% of FICA and Medicare taxes on that. So that, not FICA but FICA. There you go. Don't you love these? Type it yourself. Okay. So with that, if you have any questions, put it in the question box and I'll make sure to touch on that. Have an accounting system in place. Set money aside, once again, to cover your taxes and to pay them monthly or quarterly, depending on how much your earnings are. Have an accounting system in place to track your income and expenses. If you do not know how to do it, ask someone. It is very important. I have a client right now, a new client that just came to me. They are so sorry that they did not do that in the beginning, because now 3 years of back work that has to be done. What may have cost them $3,000-$4,000 in the 3 years now is going to cost close to $10,000, because it's not just the simple things. It's having to go through everything and reaccount for everything to make sure. So with that, don't let it get so late that you have to reinvent the wheel of your business, reinvent how your business operates on this. And also remember that if you're applying for the PPP loan, or if you're applying for a small business loan, you need to have a good, proper, and truthful balance sheet and profit and loss statement that you can show them. If you don't have that, and if you don't even know what that is, or you don't know what your bottom line is, or how much you spend in your expenses, or how much money actually came in through the year, you're setting yourself up for failure. Having these things in place is the framework that needs to be put in place in order for you to grow and to build your business on a firm financial foundation. And with that, I'm going to open the floor and stop sharing my screen and open it up to Q&A.
Okay, hi, Tina. I had a couple of questions just to kick it off.
Okay.
Someone says that they moved to a new state a few months ago. Their business is still in New Jersey, but because of COVID, they had to take another job. So they drive for Uber Eats as an independent contractor, but in another state. So they have a business in New Jersey that they're trying to hold on to, and then Uber Eats in another state. Do they have to file 2 state taxes?
They're going to have to file New Jersey, definitely, because that was their original business. If they live now in that state, the new state where they're doing the Uber Eats, then yes, if that is now their residence and where they live are going to be living permanently, they're going to have to file there. They're going to have to open up something and pay taxes there in that state. If they're just there to work and live in the state of New Jersey, then that income is going to be paid by New Jersey state taxes.
And then Yi Zhao wants to know, he said, does that impact the tax implication of selling the house? I think that was back to when you were determining
the home office.
Right.
Depending on how you structure it, if you do the simplified method, it's just $5 per square foot. But yes, if you are depreciating on your home for your business office, that square footage, and you are using that in the calculations, then yes, when you sell your home, your business is located in your home, and portion of that is you're going to have to recapture the depreciation, and the sale of the home also you're selling the office building per se. And so yes, there will be some tax ramifications on that as well. But that's a whole big story.
Someone is starting a mobile notary service working with different clients. Should I get a tax identification number?
If you are naming it, number one, I would, because I'm also a notary and I have that in my business and I go to places, but you are going to want to have not just an EIN number. I would make it an LLC to make sure that you have some limited liability there. Also make sure that when you are doing your notary services, that you have insurance to cover yourself, some E&O insurance on that. That's another part of business, but it's so important. I would definitely get an EIN number, fill out that SS4, and I would put get an LLC and have that as an LLC. Not only that, but it's easier to track your business expenses in your vehicle and being able to write your vehicle off, however it is that you're doing that. The other really important thing is when you're doing this and you're starting your new businesses and you have your checking account, your business checking account under no circumstances is your personal savings account or your money. That is your business's money. If you are a sole proprietor and LLC, even though you're not on payroll, what you do is if you want a paycheck, you write yourself a weekly check and you write it out to yourself as an owner's draw, because that is what it's considered. That way, if anybody comes in, if the IRS says, well, I need to see, or even the SBA wants to see where your money went for your EDIL loan or your PPP loan and stuff like that, they will see that, yes, the PPP loan went to pay you as the owner of that, that was your normal working, or when you applied for it, they could see, yes, every week you took out $500 a week, but also it's tracking to see how much you made. You put that in your personal checking account. That's when you use to pay for your personal bills. Because if you use your business checking account for personal use, the more you use it, what happens is you are no longer a corporation, an LLC, or an S corporation. The IRS can come in and say, you've been using this for personal, this is a hobby, or this is just a personal use. All of your expenses are null and void because we don't know what's the difference. It's your word against ours. And if they're in a mood, they're going to say those expenses are off the table. Now you have to pay tax on all that stuff that would have been. So you break that veil, that corporate liability veil, if you start using your personal, your business account for personal use.
The same person with the mobile notary service wanted to know, does the same rule apply working as a 1099 contracted service?
Yes. If they correlate the mobile notary and the 1099 contracted services that you do, if they go off of each other and you can work them together, then that can be under one business. Or even if you do your last name enterprises or something like that, you can put it under a blanket and have all that income coming into that. That's one service.
Great. Are there any other questions? We have a couple minutes left. I just want to, we're open for questions, so please send them in, but I just wanted to kind of reiterate what Tina was talking about. I'm not a tax person at all, but I do know that my clients at the beginning of COVID, at my clients who had relationships with a banker and relationships with an accountant and kept good records, were the clients that were able to get the PPP pretty quickly and pretty smoothly. If those relationships weren't in place, there was a lot of scrambling going around. And so, hopefully we won't have another emergency like this, but you never know. You never know from day to day. So be prepared and be professional about it.
Right.
I don't see any other questions.
Kim B, she asked a question here. She started her wellness coaching in December. What you can do is, depending on if you did not have any income in December, you can use all of your expenses for, whatever it is that you put in place for your coaching business. You can carry them over into 2021 when you start making the income and use them as your startup costs, to put all that into place. And I would think about doing that. I would talk to if you have an accountant or your tax professional, because of the fact that you don't have income this year. And next year for 2021, if you make the money, you're self-employed, you're going to want the expenses to come off against your income and not against a zero and have it as a net operating loss and maybe lose some things. Not only that, putting it forward, it just helps balance out your business. Right now, December, you just are opening the door, so you really don't have anything. But that also goes if you did not have any income in December. So, and if you want to contact me, if anybody would like to contact me through SCORE, you can get me at tina.parmigiano@scorevolunteer.org.
I'll put it in the chat.
Okay. And also my business is up there too for anything else if need be. So and
Ricky had a question.
Go to my website too. If you're looking for I have my newsletter that is on my website. It's www. I'm going to put it here in the chat. It's www.parmtaxsbcs.com. Don't ask me why I made it so confusing, because nobody gets it right. But it was a long time ago and I can't change it now. So with that, you can go ahead on there. You can leave me a message. Feel free to email me or contact me, and I would be able to, help in any other way that I can to answer your questions. If something comes up after this is over and you need answers, I am here.
So Ricky wants to know what if he can pay his utility bill for his home. Can
Not
he pay
the
it
full
with
thing.
his business account?
Right. No, you cannot pay your utilities. You have to, the payment has to go, the money has to come from your business account to your personal so that you can make your household payments. That means your utility, your mortgage, your property taxes, anything to do with your home, even though your office is in your home. And that is because your office does not encompass your entire house. You live there, you sleep there, you have your kitchen, everything else. That is part of your house. So what you have to do, not only that, you only use a portion of the utilities in that room that you're in for your business. Your utilities have to be on your home, whether you work there or not. So you cannot pay the full thing. So it goes by percentages.
Somebody's asking, how do I get an LLC?
There's, you can message me and I can help you through that. There are things like if you're a do-it-yourselfer, there are places you can, if you give me your email address, I can send you some links to some places that will do it for you, like mycorporation.com. My company also does LLCs. You can go on the state and do it that way. Make sure though, if you're going to do it yourself, you know what you're doing. And because not only do you have to do the forms to form your business, to do your business formation, you also have to have your SS4 done. If you're going to have employees, there's other forms with the state. If you have sales tax, there's other forms that you have to fill out in a certain amount of time to make sure that your business is set up properly and you get the right tax formation done.
You can go to newjersey.gov and
That's right.
they have a site where you can register with the state and set up your LLC through that.
Right.
But again, you need to understand what you're doing.
Right. The state is NJ, what is it? State.us.nj.
I think it's just nj.gov, I believe.
Yeah. And then if you put a / taxation, it will take you, and then you go through business, and it will walk you through there pretty good. The state fee for that is $125 for the minimum fee just to file your registration. With an LLC registration, there is in the state of New Jersey, every year there is an annual fee that you pay of $75 to keep your LLC up to date and in good standing with the state of New Jersey. And that also will help you. I was just reading Ricky's and got myself off track, but that will also help you stay in good standing, but also pay your taxes on time, because if you don't with the state, they can, they will put it in there and you can lose your formation after. If you don't do it in 3 years, then you go into, but they will send you a form every year. What was that? I'm sorry.
Could you just repeat the steps, how you would compute your business, your household utilities when your business is in your home?
Okay.
Just
for Ricky. Okay.
Step by step.
What you do is you take your square footage of your home, and then the square footage of your office space. Okay. Then you're going to divide that and come out with the percent. Like if you have 1,000 square foot and you have an office space of 100 square feet, that's 10%. So you would take a 10% of your year your year to date at the end of the year, how much you paid for all your utilities, what you paid for water and sewer, your mortgage interest, and your property taxes. Also, with your mortgage itself, you would depreciate a portion of you could depreciate a portion of your mortgage on that. But remember, when you start depreciating your home against your business, that when you sell your house, then there's a whole lot of other stuff that goes into it when you sell and how much money you get back. And it's a very complex thing there. And how do you pay that? I saw that come up is what you do is at the end of the month, you know what if you're on a budget plan for all of that, you just write yourself a check and then you figure it out on your taxes at the end. But what I would do is say you pay, like I have a budget plan for my utilities, 140 for, what is it, electric and 100 for gas. So that's $240. So you can write yourself a personal check from your business, put owner draw in your, mark on that for an owner's draw, deposit it into your own checking account, and then pay your household bills.
From your personal
account, right? Because the calculations go into effect at the end of the year, basically. Or if you want to do it in your accounting, you can say, okay, I had to pay $140 for utilities. I take 10%. So $14 went to utilities. You can do it that way.
Okay, I think we're right there. A lot of good information. Big takeaway, if you would like a mentor at SCORE, just go to centraljersey.score.org and find a mentor, and we can connect you with somebody who knows a little bit about taxes. You can contact Tina directly. We put her email in the chat, and she can direct you as well. Or work directly with your own accountant. But in any case, get your accounting straightened out, get it done professionally. Yes. It'll save you a lot of time, a lot of money, and a lot of heartache. The webinar was recorded, and it will be up on our website, centraljersey.score.org. Give us a couple days to get it up there, but the recording will be up there. And we will send you the slides from the presentation today or tomorrow. So Tina, thank you so much. It was a lot of information. I know it's hard to cram all of that into such a small time frame, but we really appreciate you being with us and sharing such good information. Everybody's now ready to do their taxes.
Yes. Thank you so much for having me. It was a pleasure and an honor to be here. And I hope that I brought some clarity and some value to you all today. Thank you for having me.
Okay. Bye-bye, everyone. Thank you for attending.
Bye-bye. Okay.
Okay, if you'll send me the...
Yep, I will send you a copy of this. I will get off of here and send it right to you.
Okay, thank you, Tina. We really appreciate it.
You're welcome, Jane. Thank you so much for having me.
Great information. Bye-bye.
Thanks. Bye-bye.